Good afternoon, everybody. A little bit of a recap here. So the continuation force up from yesterday and today, completely obliterated. So I'm going to go over a couple little things that we've seen here today first, and we'll take a peek at a couple other things. So this morning we called for a pop to short entry. I only want a very small pop to short entry where it pushed into some notable resistance, like a pre-market high right here, or even a half deviation on the 1 minute when we were there. It's all recalculated now. We can't really take a peek at it, but we ended up getting a little bit more of a big push up here, and that's perfectly fine. But we hit upwards of the +1 deviation on the 5-day, and that was right here on that day trade. Now, my whole thesis was to come back and test some of these 5-minute moving averages and then go back long. So as the cross came down here this morning, 50 was under the 100. I was looking for it to cross back up, maintain trend, and kind of continue on a pop to short dip buy scenario open. Well, we got the pop to short to dip buy scenario. It just went a tad bit too high to catch the real easy one. Now, this big pushback up here into hot territory, into standard deviations, is a very fast 15 minutes down. But the trade plan worked regardless. That 50 caught up on the cross. Here's the recross of the 100 in the green, 50 in the red. It bounced, it progressed through that moving average support and maintained top oscillation. We never came back down into the bottom of the RSI oscillation where trend can become downward. Now, yesterday's close, right here on this white dashed line, was the long call that we had called on live for chat, and I did catch a little bit of that nice bounce there, and I said I'm probably going to leave a lot left on the table here because I think it's going to probably go back up to lower high or highs before it pulls out another pullback, and that it did. And we got a good green off this, but really should have been a lot more for it with that panicked red. But let's talk about overall market conditions and why some of these setups today and some of these price levels kind of became what they were. So if you look to your left, we're really big on following algos and how they speak to each other here. And we're going to look at all these algo wicked leaky candles here after hours. And if you see this little area of bodies, right? And these are all the bodies that close in all these weaky algos. These things talk to each other, whether you like to believe it or not, whether you think it's a fallacy, whether you think it's just a glitch. I found a lot more convincing evidence of the opposite. So if we take a peek at this right now, notice where that support zone was hit. Notice where the grouping of the bodies were on those algo candles, okay? So if we look to our left, use those eyeballs, look at those coming right back to zone of support, okay? So when we get algos, whether it be pre-market or after hours, you do want to pay attention to where the bodies are, and you're going to use that as trend direction over or under, mixed with a lot of the other catalysts we get, and that was a very good one for today. Now, yesterday's force up also never came back for any moving average tags at all. For support. So you see this thing just rip out of the gate, and I said, yeah, probably just plow all the way back up. 447, 98, and 450 were my two targets. We actually hit the gold level target here, then a little bit more went. But more importantly, let's take a look at the moving averages here. The 10 SMA, right here in the dashed blue, was never, ever let go of as a complete algo buy-up. After we came out of the gate, we hit all of our moving averages right here, and it never came back and tested. And that's fine because we have a test of a 50 SMA on the daily, and my trade call was anything over the 100 fib right here and anything over the 50. So this price level here, anything there, just go long. And the second part to that prediction, if you look at our other videos, was the VIX, right? So the VIX had this massive gap, and we've been talking about this for a couple weeks. Here's that zone right here. And I said, if the VIX comes up to 18, it's going to lose on trend line. Let me go up to the 30-30 real quick. I'll show you where the top I picked is on the VIX. Orange trend line, green trend line, 1830 area. Once the VIX lost this downward trend line, we had three separate trend lines here that we're working with in the topping VIX pattern. And once we had broken down a beautiful trend here where we got some fresh lows, trended down, we did the little scan pop here, which is fine because it left these gaps. My team know how to play these very well. It started failing. And I said, okay, well, this gap is the one we need to look for. It's $14.40. And we talked about, and again, you could just check the prior videos here, and we went out and we went through how the gaps in the history of the VIX work. And a lot of the VIX does not run at a gap up. Gap up, fail, gap up, fail, gap up, fail, uncommon, gap down, sideways, did nothing, gap up, fail, gap up, sideways, kind of push, and again, another gap up, fail. There's only very few times where the gap would fill immediately, being a common gap right here, where the price opened and yesterday's highs left a gap, but it was filled the same day. Long, Here's the gap day right here. Here's the gap between the open and the high. It's very thin right there. But then once it was filled same day, it had a couple days worth of strength. If the gap is left open, it does not. The Volatility Index does not like that. Now, again, this is a lot of algo, right? So if I come back into this zone we've been watching very closely, and this is a zone that had to fill before anything else could plow up right here. Here's that gap. Here's that shaded area of zone, and that is the one we said would fill. And I said stay long until at least that fill, if not more, okay? So go back and check those prediction videos, worked out well. Let's get into the nitty gritty on what's happening now and next. Well, I'm maintaining my bullishness on the macro level, okay? We went over again, just to touch base, the shying away from 100 EMA daily. Right here, high or low. Not only that, we had so many oscillation indicators giving us divergence and telling us that we were going to get this big red candle was a nothing sandwich, this big old gap up flat hit. That was the first 50 SMA daily tag. So it opened up right into that 50, washed it. Everybody got so excited, short all the things. Obviously not. That makes no sense. All the oscillation indicators are perfect for buy up, so on and so forth. Let's take a little deeper look at... That is the wrong one. A little cleaner chart and look at some pattern plays here. If you're looking at a daily chart or other, you're going to get a patterned big W, right? So we know the oscillation's good. We know we had buyers in control in our volume beat system. And we know that we still have a gap up here to attack. And I still think we're going to get up there. Now, the big W is now pressed in, right? Look at this W. Those are fantastic. Had a really good breakout day. We were spot on with macro long thesis because of the VIX gap. And it could have went either way. And that was your 50 SMA over under. And if it was under, came back down, we're going to chase down the 100. If it was over, we're going to chase down the gap. That's what we said in our prediction video, right? So utilize that wisely. There it is, over the standard deviation. Now, some of the things still kind of irk me here with this big W play as to where this could come back up, either hit its head on the gap or trickle back down before attacking the gap and find the center. The center is the W where you're going to want to pay attention to here, okay? This is going to come back up, boom, boom. Now, there's still, to my, I don't want to say thesis, guess, TA, we will get a pullback into September 15th. Can't tell you why, but near 15th to 17th, that's going to be a doozy. So September is still going to be about 10 months. So if this big W plays out, comes up to here, chops at the gap, does a big pullback, I would buy that too. Okay, you're going to have a buy zone on trend lines from this higher low setup, the big W setup being the center. That's going to be a buy zone setup. Penning into that W. So if this thing goes way too fast, which it's been moving quite fast here, and pushes back up here, we don't get any red days. Like tomorrow, we should get like a little red, trickle down, hit, boom, 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 come back up in the next 2 weeks, hopefully come into some of this resistance here and fail. I don't care if we drop the 100, wherever we happen to go to, doesn't matter to me. It'll still be a dip buy because we are still on an uptrend. It does not matter. The trend is still friend. Now, deviation wise, we knew we were going to come back down here. We don't really get outside of the +1 deviation, right? And then we come back down to 0. If we confirm weakness at the 0, we're going to come down to the -1. That's how it usually works. And we knew we were extended up here prior to the gap down. That's why we went short. And then we knew the big breakout was coming again on time cycle math because we love this so much. Knew this big part was coming. And that's why we stayed bullish until time cycle broke back over, used an over under. It went well. Now we do have volume in control. And the only two options for this thing now is to either pull back to the W, keep going to the gap, either which way, and either one of these plays, whether it be continuation on the grind up or a back test of that center W, or even a really clean test of the 50, because we don't really have one on the longer standing time frames, SMA daily. Those are the dip buys you're going to want to watch next. If you're a short player and we're coming up to some of these first and second week of September, I urge you to sell some calls on ES, SPY, whatever you plan on playing, either up at that deviation daily or even half. I could even see half, which is going to be in between, obviously, the 0 and the 1. So if your regression trend is here, your +1 is here, I would be selling some into the half deviation. That's going to be the, we got here 460, yeah, 459.44. So I think coming into the next day or two, into the end of the first week, into September 15th, or 2 weeks into September, we're going to get a very nice pullback, red candle potential, right? Because the market doesn't really care what we think. It's going to do what it wants, but that's what I'm going to be looking for. And that is going to cause a gnarly pullback, but more or less a dip buy into some of these scenario trends where we had just hit some big highs off of higher high, higher high, higher low, higher low, higher low, higher high, still a higher low. Trend is still there. So even if it goes back up and comes all the way down to either a double bottom or hits what would look to be in this early sequence a lower low, right? So if we lose this support right here, which we just came out of, and it comes back down, that still does not mean lower low, because this is that 52-week low. This is the crossed higher low. So this is still the buy zone. Well, if this happens to push back up here, maybe here, falsely fall all the way back down to trend line on lower lows, right? Which is the trend line that's right here. Those are going to come into some major moving averages right here. 200s, a couple of the other ones I'm not going to mention that I have for custom. And that's going to be a big buy zone, I think, into the end. And if that does not happen, we get a fail or a sideways chop, that's perfectly fine. But the day trades coming up on options calls, those are the only ones that are going to happen. So this big W into the gap fail. So we're going to be depending on data as well. Coming up, we're going to possibly hit this 50 back test, consolidate, do whatever it wants to do. The September pullback might not get to trend. It might only hit the 100 EMA and then go back to running. So don't think it's just a topple, black swan, gray swan, everything's going to fall apart. Technical analysis is still on the uptrend. So let's take a little peek at the ESs now. Real fast, I do want to just bring a point to the section of the 30-30 here, because we use this a lot. The 30-30 is extremely extended at the moment. We are obviously in a downtrend. We got a time cycle rotation, so we were 100% long biased here. And then within, what was it, 20? Yeah. And that was going to be breakout potential. Now we are into the plus 1.5 right here and plus 2. That's very high. So if this determines it does not want to pull back, or at least a pullback down, again, the centered W is what we're looking for on the daily chart. This 30-30 would have to come back here. We got this big force up. We got a lower high on RSI. We got oscillation still kind of holding, but the oscillation markers on the 30-30 ES, I'm going to wait for it to break down to the bottom channel and do a reset. We need to come all the way back down here. And even if it wants to plow back up again in price action, that's fine. But the deviations are too slanted to the downside here. We need reset capability. So I need the MAC to kind of give me another dip like back here where the reset was, where it found support, or I need the price action and RSI up here to do the same thing, dip back down. I don't care if it's only to the standard deviation center, like right here to the hundreds, and it just stuck overnight. Doesn't matter as long as the indicator's oscillation resets. So the top channel goes to the bottom for a little bit on both metrics of the RSI and the MACD, while the moving averages catch back up on this thing that have not hit in a little while. Now the ES is 50 hit here on the big dump here this morning, and open, slammed into the 50, kind of recovered, so on and so forth. But we're still on big trend for there. We're getting separation of 50, 100. We could still run from this, no problem, into the 2 or even higher before it plummets. So maybe another green day, maybe another small inside day. But when that pullback happens, that's the next dip buy. And this next week, whether it be chop or push, I will be short into the September 15th area to potentially get that volatility. If it happens sooner, going to take it sooner, but into 15th confirmation, we're going to see that roll happen. So that is it for our future predictions and all the other ones that have played out so far. And keep an eye on that. So again, with the daily oscillation coming out here too, we're going to see most likely this can kind of peak into the 0. And that's going to be the higher low here on the daily. Same here, small buy wave to a small sell wave to a big buy wave. It's going to look like that. And then you're going to get the RSI back to a 50 point, maybe a false cross, and that's going to be the higher low there. And that's going to be that just center W and up. So watch for the oscillation keys as well. So we'll catch on the next.